G'day traders, I'm Greg McKenna. Welcome to Markets Morning. GregMcKenna.com.au is my website now, and I'll be working for myself. I'm still doing the morning report, so if you haven't subscribed to my email, you can find the link on that banner that comes up on that page. I'm starting the videos again today. Why am I starting them? It's the 25th of September, and anybody that's been watching me over the last few years knows that I love a Christmas countdown. So why not? Today's as good a day as any to kick off, and it's a really important day. There's some really big moves that could be about to happen right now. We've seen that US stocks have rolled over a little bit in the last couple of days after making new record highs last week for the Dow and the S&P. The Nasdaq didn't take part in that, which is really interesting for me. It did rally last night, up 0.23%, while the S&P was down 0.35 and the Dow was down 0.6. But the Nasdaq hasn't made new highs. It's still in that that neat channel it's been in for quite some time. So I have to wait and see what goes on there. Of course, what's going on at the moment is that we're starting to think about the Fed, or traders are anyway. 2 nights from now, the Fed will make its announcement 2 nights my time, 4 o'clock Thursday morning. And what we've got is we've got the US 10-year up at 3.08, I should say. Now, part of that is because of some technical issues, the end of the tax-driven demand in the long end, but some of it's also because some of the doves on the Fed have taken a very hawkish tilt. Last night we saw a 2-year note auction that didn't have the greatest bid-to-cover ratio ever, and we've seen those 2 years up at 282. So we're waiting on the Fed. If they are as hawkish as I think they might be, and as foreign exchange traders are starting to sort of position for, then we will see the US dollar stronger, might even see equities under a bit of pressure, and you've got to watch the 3.15% level for the 10-year. If, on the other hand, they are not, then what Mario Draghi said last night about the vigorous increase in underlying inflation, even though he did comment about that inflation was only going to rise if interest rates are kept low, that will come into the fore and euro will roar. Speaking of which, it got up above 118 last night, 118.15 or thereabouts, back down at 117.5 this morning. Sterling, after capitulating Friday, caught a bid last night. It's at 131.14, up about 0.2%, I think, day on day. Dollar yen, 112.80. It was much lower at one stage, but has bounced back. So the US dollar did really do a fight back last night. The Kiwi and the Aussie got belted. The Aussie's at 72.50. That's down about 0.5% from where it closed on Friday. The Kiwi's down about 0.6, 0.7. It's at 66.38, waiting on the RBNZ, not expecting anything from them. And dollar CAD's at 129.49. A lot of confusion about the CAD because oil was through the roof, but dollar CAD actually rose. So oil was through the roof because of what OPEC did. And they basically did this to Donald Trump. And of course, from the get-go yesterday morning for the open of trade for the week, basically we had a break both in Brent and in WTI terms of the range tops. When I did my study on the weekend, there was a clear triple top in WTI, and I wrote in my morning note yesterday that we know where the point of pain is. If that runs, then we see a run towards sort of 74. Sorry, it was 71.20, 71.50. If that broke, then it was a run to 74, 74.80, something like that. Anyway, let's kick off with this WTI chart. And notice the banner, Greg McKenna. Oh, quick disclaimer. This is just my setups. This is what my thought process. These videos need to come back because I trade better when I do these videos. It's just a stream of consciousness. So I hope you enjoy it. Hope you get something from it. But this is not advice, folks. Right, what do we got? So we've had a big move. You know the McKenna mantra. The McKenna is respect levels unless or until they break. And my favorite, or my first ever trading system was the Fibonacci extension one, which is basically what we've got here. We've got a move. We've got it come back. It stayed above the 61.8 just, but it did. And then it's had 3 more goes. Ding, ding, ding. 2 more goes, I should say. Now, Tom DeMark would really, really have liked that break last night. The reason for that is that it had 3 goes at it, so the market wasn't necessarily mega long, or at least the short-term market, for that break. Peter L. Brandt has put out a thing on Brent saying $85 something, but here on WTI, the target's about 74. I've redrawn this from what I used in my charts this morning, so it's somewhere between sort of 74 and 75 bucks. Is the target. So we'll have to wait and see. What could Donald Trump do? Could he come out with the SPR? Of course he could. But it does seem, there's people talking about $90 oil, $10, $100 oil. There does seem to be a tightening in the market coming. The market does not seem to be willing or able to supply what Iran may take from the market, what Venezuela is taking for the market. And for me, part of this is that perhaps the Russians and perhaps the Saudis know that it's better to say they're not going to do it than to try and do it and fail, because then suddenly we've got $120, $130, $140 oil, and that's really bad for demand and for the economy. You get that natural boom and bust that you always see in commodities. Looking at Brent, everything's a bit slow on my machine today for some reason. I'm not exactly sure. So another similar sort of setup, a rally, a pullback to between the 38.2 and the 61.8, and then we take out the high. Now, as I said, so 81.39. If you have a look at this on the weeklies, oh, you can't even see it. So basically, let's go back the other way because the data in there. I need to find some more data for this and load it into MT4. But what you got? You got 76. You got 79. Let's call that $3.50. So 79, 82. 83, 83.10, 83.50, somewhere like that. Peter O'Brand, as I said, says $85. So will there be a retracement at some point? Probably, but a layup is what Peter O'Brand called the outlook for Brent. Just quickly looking at copper, what we saw last week was these videos have been gone for a week or so. So we had trade talk wasn't as bad. Rhetoric wasn't as wasn't as aggressive, and so to that extent, we had this relief rally. We had this relief rally in Chinese stocks. We had this relief rally in copper. We had this relief rally in the Aussie. We had Li Keqiang, the Chinese premier, deputy to Premier Xi, saying, well, we're not going to use the renminbi as a weapon. And what do we end up with? We ended up with this relief rally. Now, 86.5 was the high on Friday night, and that's about the range top that we saw over here. So we've made a nice round trip. If it gets taken out again, then you'll know that something interesting has happened about and for the outlook for global growth. So keep an eye on that. But for the moment, it's gone vertical. If you have a look at the 4 hours, there is a real and material chance that if it takes out that level there, which is 281, basically a cent or a cent and a half below where we are now, cent and a half, then we'll see it roll over. The 4 hours suggest a rolling over. When a price goes vertical, that might be the second McKenna mantra, if I could put it that way. Then we get a rollover. And gold, just quickly going nowhere. It really needs to take out to sort of 216 to 220 to really kick on. Hasn't been able to do that. It needs to hold 1190 and then 1180 if it's not to fall. The Fed is going to be a big deal for markets. Speaking of which, the euro. What do we got? Well, this is the weekly chart. We'll go back to the dailies. You can see here yesterday's candle. If I blow that up, an appalling candle. Higher high, lower low. And we're having a better day today of it, but that tells you something. Mario Draghi's comments were important because they signalled a move towards higher rates in Europe. But what he also did was try to temper any excitement about further rate rises. The key thing, though, is if you look at the relationship between, say, the two-year forward EU rate and where euro is now, it would suggest euro at 120. Now, it's not a perfect relationship, and we've seen back in the early parts of Q2 that it got well away from where the euro was, and then it caught up to where the euro was, no doubt because of the data. And the Euro Economic Surprise Index is pretty poor. It's like the weakest on the planet at the moment. So perhaps that's overcooked. But if the Fed is at any point dovish, then the euro can rip. 118.50 is the level to watch because that was the high that we had over here. But you could probably argue that that's some sort of a decent pattern. And if 118.50 breaks, it's not my base case. I think the Fed is going to be hawkish, but then that's starting to get priced as well. If we look at dollar yen started to break higher just recently. You can see that there. It's back up. Oh, I've lost my mouse. It's back up near the top of the range. There we go. Back up near the top of the range. If I shrink that down so you can get a better view of it, this is the big resistance level. If we have a look at it on a weekly basis, there's a lot of resistance there. But could you argue that this is some sort of like long-term ugly head and shoulders that actually is going to see if we get through the top of that blue line? That we could run 7, 8 big figures, 120 maybe. So that's about 114.5. So we're getting into the turgid resistance zone. But as it stands at the moment, if we take that similar stance that we're looking at for oil and for well, both sets of oil, you know, we've had a move, we've come back, we've tested the 38.2. If we take out 113.13, then you've got about 330 points, which would make it 116.30 or 40 or 50 or something like that. So keep an eye on that. A lot of it depends on the Fed again, folks. It's a big event. Sterling is Brexit messiness. You know, it broke high at a 133 odd. I suggested last week, based on the 4 hours, a little sell day early, but then I said that that 133. This is in my writings, 133.13, I think I said, not 16, would be resistance, and we had this big collapse. So it's steadied itself for the moment, but the MACDs do suggest a little bit lower. We've got some support here at 130.50 and last night's low, if I may, it's 130.62. So we've got 130, say 40.60 as support levels. If that breaks, then I would expect a run down to about 129.40 or thereabouts. In terms of the battler, so just to recap, we had that rally. Look, the MACD turned. You know why I love the MACD. The MACD is just simply, for me, it's a momentum indicator. It speaks to me about when you know, the bulls start to get full or the bears start to get full, and you can see in that positioning 68,003 net short for the big specs in Aussie, which is the biggest it's been in years. Does speak to that you know, that lack of appetite or lack of ability to get more short, and we saw that strong rally last week. But we also saw here a continuation of this downtrend, and the Aussie has backed off a little. 72.20, if you look at the 4 hours, and then 72 are the key levels. If it was to get down through 72, then I'd be looking for 71.40, 50, and then 70.85 if that gives way. Equally, once again, you might be able to argue if you're into 5 waves and all that kind of stuff. That's a 1, that's 2, that's 3, that's 4, and maybe it is going to head back there before the next leg down. Maybe it'll head fake. Stochastics are in overbought, but that in itself is not enough. But keep an eye on that. Whilst it's below this, you know, this downtrend line, and whilst copper's reversing, which it is, still a really strong correlation between Aussie and copper, and still a good correlation between the Aussie and the euro too. So very much global growth, trade war, US dollar. Again, Fed's going to be a key impact on that. Dollar CAD, interesting. You know, we've got this big downtrend, then we broke up, ran into resistance, came back down, broke up, and we've come back down again to the bottom of what looks like a broad range. So my sense would be if 128, call it 75, broke, we're back into the 126s. Is that my base case? I'm not sure. Isn't it interesting? You can really make the case looking at the charts. They haven't broken yet. But you don't want to be long of dollars if those levels in the Aussie, in the euro, in the CAD, you know, 133.13 or thereabouts in sterling break. You know, these are interesting junctures. These are perfect levels in the wave 2 psychology, if I could call it that. So your first wave is nobody believes in a move. Your second wave is the people that believed in it initially just tentatively kind of think, oh, well, maybe they're wrong. The people that didn't believe in it say, ha, 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 and they laugh at all the people that thought that there was a move afoot. So think of this thing in terms of a much stronger US dollar. And you get this kind of, oh, maybe we're wrong, maybe we're right. That's why the Fed is so important, because of where we are in terms of price and where we are psychologically. Massive night, huge. Anyway, I've said that 55,000 times. I should have to make a donation to charity for each time I say that. That's pretty much it, I think. Oh, stocks, of course. So the Aussie market, that's the 4 hours. We don't have 4 hours. We don't have. So we crashed. We came down. My question is, are we going back under 61.45? And if we do go back under 61.45, are we then heading to 60.90, potentially 59.90? That's just something to think about. We weren't able to get up through the 38.2% and hold on a day close just recently. So there is some downward pressure. There's a lot of dividends being paid this week. So that has the impact of knocking prices down, but then often the money comes back into the market. So it's an interesting battle there. In terms of the US, the weekly uptrends, my Jimmy R, my 15 and 30 EMAs, weekly EMAs, are all pointing higher. So that means the bull trend is still intact. That is, for me, the primary thing that you've got to think, well, not you, but me, have to think about. So any selling is counter trend, if that makes any sense. So for me, we made a new high. No point getting bearish. If we take out this high here, which is 29.16, here 29.17. So if we get down through 29.15, then you can get a run lower, because that would be the ledge. In many ways, that we had this ledge over here. They seem to work. We had it here. It found support too. So that's a level to watch for me. Short term, not bearish unless or until that breaks. Obviously, the Nasdaq is really important. If I can find it, there it is there. And you can see that we've had this uptrend. This is the dailies, of course, and it couldn't get back up and through. And then the Nasdaq had a shock. The DAX had a shocker last night, down 0.6. If you extend this line, you can see, and that's actually a channel. That one and that one turned into a channel. The overall uptrend is still pretty strong, but it's gone vertical, which is always a danger. So keep an eye on that. And you can see where resistance is. I think it's 15.15. 15.115, I think. So keep an eye on that. Anyway, that's it from me on behalf of myself and gregmckenna.com.au. I want to wish you all the best today. Have a great day's trading, and I'll catch you tomorrow. Bye for now.